Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today I'm gonna rip through Twitter like I normally do, talk about financial topics, commodities, and or wealth building topics. Those are what I cover. I'm gonna interject my financial opinions as we go, and we'll see what people are talking about. Probably going to be talking about uranium. I know uranium's on the top of a lot of people's minds as they see the futures pricing go up. And we're also starting to see pretty big moves in a lot of these producers, developers, and soon will be the juniors. Let's dive in. Let's see what people are talking about. If you want to follow me, it's at @funny_finance. And if you want to join our community, if you need help with anything from this commodity bull market that's coming, if you want to know what uranium stocks I like, what I hold, what I am going to be buying here in the short term in uranium, join finding-value.com. That is where I share everything. We've got a 5 p.m. Mountain Standard Time Sunday session coming up for a question and answer. And if you guys have questions, you can reach me directly. So we've got Scotty here, and Scotty does know. Very much on path still. If it stays on path, we could see $200 this year. Always do your own research. He's got me tagged on here. What he has is the Ethereum chart overlaid on top of the uranium futures price. Now, Scott and I did a lot of videos back in the day. You can go back and watch those if you like. We are still incredibly bullish on uranium. We overlaid a lot of different fractals from different markets, uh, overlaid and shrunk, this way and this way to get a rough time frame slash price projection, and that kind of squares everything up when you size it the move here. A lot of people think that we're in a K wave. A K wave is a Kondratiev wave, and that the first move in 2007 is going to lead to a larger move, and that 2000 to 2007 or 2008, depending on what commodity you're looking at, was actually wave one. We had a pullback for wave two, and then we get a monster wave three, and eventually a wave five. That comes basically now. They occur during inflationary periods where we see new home builds go up, and that's your inflation credit expansion in the system that gets in the hands of people. More jobs are created, construction jobs, et cetera, et cetera. So that's the market conditions that it occurs under, and we're in an expansionary phase right now, and that's why we are so bullish on commodities in general. We did a lot of videos on money rotation, how money flows differently, how there's zero foreclosures, a buttload of money in the banking system that people can invest. There's a whole bunch of positive evidence of a potential big move coming. Good job with Scott. Scott is on top of this stuff, and I do value his opinion here. So it's looking good, guys. Scrolling down, uranium, holy cow, $102 ask price on that. Here we go, guys. Time to make some demand ground for propane, natural gas, liquids. We've got some serious cold weather coming up, and we're probably going to see a major drawdown for propane, natural gas inventory, all that stuff, and it's going to happen over the next few days, weeks, is this cold weather that's going to be coming here across the entire United States. Cuppy says inflation bottomed in late 2023 and is inflecting higher against super easy 2023 comps. So we didn't have a lot of inflation in 2023, the beginning, and late 2022. So when you compare it to the year before, it's easy to get a lot more inflation on a year-over-year basis. Meanwhile, all these asshats are debating if we get 6 or 8 rate cuts in 2024. He's laughing at it. Tens are on borrowed time here. Yep. He thinks interest rates are going to go up, I think is what he means. Core services, less rent and shelter. It's coming back up. We bottomed late 2023, and we could be looking at higher interest rates potentially if this does occur. And I hate to say it, but with the housing market where it's at and the new home builds that I think are being sold right now, I've got some information here later on. I think rates may have to stay high if he's going to try to hold inflation down. Yeah, here's UXC reporting 95.90 a pound spot. That was 4 hours ago. We've got, this is not bullish for US stocks, but it is for uranium. This is Apple versus Camco. So this is the chart we've got here for the ratio chart. And you can see that Camco is basically going to do laps around Apple here. We're going to get a big move to probably the downside where Camco outperforms Apple. And this is going to be the bull era for uranium. That is ahead of us. It's also going to impact oil. And I know people are pretty bearish on oil right now. I am not. I think we're going to go higher. I think natural gas is going to go higher. I'm in a bull of everything. And what's going to drive this isn't what people think. They think demand supply. They don't understand the credit that's coming in the system. It's credit driven. It's the denominator that's going to get hit. And that's why all of these different commodities will do very well. And some commodities that do have supply shortages are going to do ridiculous things. But I'm in all of them. I'm across the board. Now here's KB Homes. KB Homes, as interest rates have now declined since the end of our fiscal year, demand has improved significantly. For the first 5 weeks of our first quarter, our net orders are 904 as compared to 403 in the comparable period of the prior year. And guess what, guys? Those stocks are at all-time highs. And if they're over double net orders in just the first 5 weeks, I don't even want to know what that means to their bottom line. Now, this also means that housing starts are probably going to jump. It also means that we are smack dab in an expansion phase of real estate and that these are the exact market conditions that I am monitoring for. We are in it. We are in the conditions that I look for. And those conditions, credit expansion of new credit being loaned against new home builds like this, is going to be inflationary. There's a lag between it though. So if you know it's coming, and I'm going to show some information on some other posts below this, this is where commodities go ballistic. Uranium, a lot of like copper, iron ore, steel, shipping, dry bulk, oil, nat gas, etc., etc. So I'm locked and loaded, baby. I'm ready for this. Bring it. Bring it on. Let's turn this money into multiples higher. What I'll say. Germany avoided an energy crisis by erasing decades of societal progress. Great job, Germany. Electricity is now so expensive that the average German used less electricity in 2023 than they did in 1978. Green praised the lower emissions, but German deindustrialization is nothing to celebrate. And there we are. Deindustrialization. Good job, Germany. Way to go. It says, okay, I have to read this, guys. This is ridiculous. And I agree with it. Dude, you bought an effing digital coin that does absolutely nothing, has no utility, but allows you to gawk at a price going up. How exactly is Bitcoin creating a better future? Or did you just mean that it's going to create a better future for you and your other fellow Bitcoin hodlers that think that they'll be able to buy endless amounts of the things that you want with your vast new fortune? I mean, this crap is ridiculous. I've never seen so much euphoria and absolute nonsense in my entire life. Totally agree. And that's how I view Bitcoin. You take the price away from it, you've got nothing. Nobody's going to use this thing. Good luck. Good luck with it. And I know that everybody tries to sit there and say, oh, it's going to go up in price. Just wait and see. It's a bubble, guys. It's tulips. It's digital tulips. Oh, it's even worse than digital tulips. It's pictures, pictures of tulips. That's the NFTs though, not Bitcoin. NFTs. Myth: fossil fuels are being phased out. Reality: liquefied natural gas capacity will likely increase 70% over the next 15 years, adding enough gas capacity to power 500 million homes. That's what's coming, guys. That is why I'm bullish on natural gas. That is why when they get these liquefied natural gas terminals up in 2024, 2025, we're going to get a repricing of natural gas worldwide. And North America, places in Canada that have stranded gas that aren't priced for crap right now, are going to get massively repriced higher. I've got big positions on those, betting on that. Betting on that. Heck yes. So Asia will underpin the global LNG demand growth. Europe is world's second biggest buyer of super chilled fuel. Bring it, baby. Look at the growth. This is 2024. 2023, look at the growth in LNG. Oh my God, that's coming. Um, Peter says there's a total lack of investors' interest in oil and gas stocks these days, while oil and gas prices are not only recovering, but are also looked to keep rising for solid reasons. Consequently, I believe this unique and temporary situation makes for a compelling buy of energy stocks. Totally agree. You should be sifting through all the stocks right now, finding deals left and right in energy right now. There's so much that is out there that looks so good, and patience is going to be needed for this to occur. Now, just underneath this, Buffett now owns 34% of Oxy. He knows the real estate cycle. He knows where we're at. He knows energy stocks are cheap, just like this guy's talking about, and I agree with both of them. You go look at the uh, ratio of oil to gold, or gold to oil ratio. It's super cheap. We are in such. This is like the perfect time to be looking at nat gas and oil. People are going to say it's in a glut. Yep, that's when you buy. You buy when it's in a glut. You sell when it's really at the peak of fear that inventories are going to run out. And guess what? Inventories are really low right now. They are not high. This is a gift. And you know what's even worse, guys? The energy service companies and some of these oil and gas companies are trading so cheap in relationship to their cash flow, it makes me lose sleep overnight because I'm like, I got to buy more. I got to buy more. I got to buy more. Yeah, so Buffett owns 34% of Oxy. Hertz is selling a third of the global electric vehicle fleet. We'll replace it with gas cars to meet customer demand, as well as lower damage expenses. Now, here is something that I don't have an electric vehicle. I have no idea where these charging stations are at. But if I were to go fly into some city that I don't know that well, why would I get an electric vehicle? I would just say, give me a gas vehicle. It doesn't matter. I don't want to worry about where to charge this thing, especially with those that don't have an electric vehicle already, because we're not really looking for this stuff. So this makes complete sense to me. And when I went and I had to book some, a rental for a trip, and we're looking at this like, why would we be renting an electric vehicle? Obviously, we went with ICE vehicles. Eric Nuttall says, despite the epically bad sentiment, global oil inventories sit at multi-year lows, while demand in December reached the third highest monthly level in history. We expect shale growth to meaningfully decelerate this year, while Iranian exports have limited further upside. There's the arrow of where we're at today, basically at almost the lowest point on this chart. We had a little bit lower over here in 2018, it looks like. I think that's 2018. And we're almost back to that low level here. Now, here's the thing. We've got a really low oil price. We haven't been drilling. We've basically taken out our drilled uncompleted wells. And if the credit is coming from the new home builds, oh my God, this is a good setup. Oh my goodness. Oh my goodness. This is a good setup. This is like 2020. Maybe it's not as good as 2020, but it's very reminiscent of these setups in history that are just all in alignment here. Looks very good. M2 money supply is contracting quickly such that bad things happen. Now, I want to make a comment on this. The money that came into the system here in 2020, people were saying, "Oh, we have a recession, the COVID crash, et cetera, et cetera." Yes, it was a fear-driven crash. Yes, people were worried about the impact that COVID could have had. The money supply goes up and down naturally from the business cycle. It's called the real estate cycle, really. And that credit being put into the system naturally, it goes through a cycle and then it comes back, and we get a crash at the end of that. It's a deleveraging phase at the end of it. Now, here's the thing. That money that was created and put in the system was separate from the economy and the real estate cycle. The reason it caused so much inflation is because it was introduced in the middle of an expansion phase with real estate. Now, that stimulus is done entering the system. I call it the stimulus overhang. But it's not because the economy is necessarily weak or hurt. Yes, interest rates have probably had an impact on some of the economy, but we're not rolling over because of a weak economy in the real estate market, the business cycle. We are rolling over, I think, because of the stimulus overhang. We still need to build all the homes. We still need to get into a hyper supply phase. And that's where I don't know what the short term will necessarily hold for us. I'm not negative and I'm not positive. I just don't know. But I think if we continue to build homes and the credit continues to come into the system and they continually spend from a fiscal standpoint, we're going to see a lot of inflation. I think the commodity prices are going to go up. It's a good setup. EV narrative violation, bullish oil about the Hertz plan to sell a third of the U.S. electric vehicle fleet. Again, this is what I was talking about, the yield curve steepening from inverted levels. Are we going to get, keep in mind, every single one of these had no stimulus in it. This one was a stimulus driven, massive, increase of interest rate move. Will it have an impact where it actually crashes the market? I don't think it will crash. I think it could potentially slow down a little bit, but it might be masked with inflation and fiscal spending on a nominal basis. So we might slow down in a real GDP, but it may not, it may be hidden behind nominal inflation, is what I'll say. Yeah, that M2 money supply, we already looked at that one. Global oil demand is expected to increase by almost 2 million barrels a day in 2024, with China accounting for more than 25% of the increase. WoodMac projected total oil demand of 103.5 million barrels per day for this year. Wow. This is ratio of emerging markets to U.S. equities at a 22-year low back to October 2001 levels. Again, emerging markets are just cheap as crap. And the way that they behave may be determined on how interest rates behave. I don't know if we're going to get all these rate cuts that Powell says, but if he cuts rates, oh my goodness, this is going to be insane for energy and commodities and emerging markets. It's all in alignment. Last time we had a big boom was from 98 all the way up. Look at this. Look at this lead-in pattern here. That lead-in pattern is the same type of pattern that we got here in 2000 or 2020. I saw that same pattern everywhere. Interesting looking chart here on the ratio though. I feel like the market is in a very Jan 2020 sort of place. You have this massive systemic risk that only a few nerds care about, and everyone else is aping into calls on BTC and tech stocks. I think what he means, he thinks it's probably like the year 2000, 2001, like somewhere in that range. Everyone is going into BTC and tech stocks, and this is it's a huge bubble. It's a big bubble over there. And the bubble's going to break, and commodities are going to outperform, and we'll probably see tech go down or go sideways for another 5-10 years. That's my guess. There's no shame in losing money on a stock. Everybody does it. What is shameful is to hold on to a stock, or worse, to buy more of it when the fundamentals are deteriorating. So you don't want to buy a company that's losing money or you don't want to lose money on a stock or have it be negative, but then also have the fundamentals deteriorate. If the fundamentals are still improving and it's just short-term market volatility, then yes, you're good to buy, in my opinion. But long term, if it's something where the fundamentals are deteriorating, then yeah, sell it, get rid of it. It's a weed in your portfolio. Yep, we've got that. Like silver, also platinum is sitting right below a historical blue breakout line. Generational breakout is incoming for platinum. What will be the greatest commodities bull ever seen and started 45 months ago? Do get this right. And we're ready to rip here and hopefully another big generational breakout here. And this is probably going to go. So here is my guess. It's going to be an incredibly wide range because it depends on the market conditions that we see. My base case of where I think this could go is 4 or 5 grand. 4 or 5 grand is probably where I think it could go. But depending on a few things, supply, demand, market conditions of inflation, how bad it gets, if people get worried, we could see a price that goes 10 to 20 grand or more even on platinum. It is a possibility. But that's for those that are patient investors. And I know they've been waiting and they're like, it's not going anywhere. Guys, you buy a pattern. You buy the pattern. You don't buy in FOMO for price. We've got a bullish MACD. It is coming on up. I don't really follow this stuff. I just wait, and we're going to get our time in the sun at some point. And yes, it might take some time. Be patient. 1976 to 1980 style cycle, higher for longer, ever more likely. I think I went over this last time. Either way, we had inventory in both of these. I don't know what we've got now. I think the inventory's kind of gone. But either way, that's what I'm seeing in the markets there today. So I'm going to end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you guys need help with anything or need stock selection. I'm swinging for the fence with some of my money, guys. I've got money that's in physical metals, not really swinging for the fence, doing the ratio game, swapping when the ratio is high and when it's low, depending on the metal, to increase my physical ounces. And then I'm playing some junior uranium companies, developers, and I'm playing a lot in the energy service, and also oil and nat gas. I love that sector. Made a lot of money in it. I'm going to continue to make a lot of money in it. Fingers crossed. The ratio is real cheap. I think there's a lot of opportunities right now, and this is going to take patience, but we've got a lot of opportunities. So that's where I'm going to end it. We'll catch you guys later. This is Finding Value.